Property and Casualty Initial License Training. This is Chapter 8, going over personal auto policy. So personal auto policies are going to be set up for the different parts you see here. Part A is going to be for third-party payouts under the liability coverage under a personal auto policy. Part B1 is going to be medical payments coverage, which is only paying out to a first party. Part B2 is personal injury protection, paying out also to a first party. Part C is going to be underinsured motorist coverage, also paying out to the first party to make up for the lack of insurance on the part of the third party. And then Part D, coverage for damage to your automobile, first party coverage only. And then Part E is going to be the duties you have after an accident or a loss, and Part F is going to be general provisions. As far as the definitions go, the insured is the person that's listed on the declarations page, and any resident spouse, any resident family members, which would include foster children, wards, foreign exchange students. Another important definition here is an owned auto is one that has a vehicle titled by the insured or has been acquired during the policy period. A non-owned auto would be defined as a vehicle that is used by the insured, but which is not titled by the insured. Occupying is a pretty liberal definition in the personal auto policy. It's in, upon, getting into, or out of, or onto, or off of a vehicle. This generally is going to apply in a lot of different situations whenever you're in the near vicinity of the vehicle. What a covered auto is going to be any owned vehicle that is not used in a business. So if it's used for a business, it can't be covered under a personal auto policy. We'll be going over commercial auto a little bit later. Any newly acquired auto is going to be also a covered auto. Any trailer that's hitched to a covered auto, and then any rented or borrowed auto or loaner automobile used as a temporary substitute, like if you had your car in the shop for mechanical reasons. So one thing to note about automobile insurance is depending on the insurance that you have prior to getting a new automobile depends on the rules of what is going to be automatically on the coverage for that new vehicle before you notify the insurer, and that gives you the different time frames. So if you had other than collision, also known as comprehensive and collision, carried prior to getting the new vehicle onto the plan, you're automatically covered for that vehicle, and you must notify the insurer within 14 days. So if you got a 14-day period to get back to the insurance company to get that added onto the policy, and the coverage that's going to be applied to that automobile that you added would be applied as the broadest that you have on any automobile on any on that existing policy already. So you get the best coverage that you already have. If you had liability only, meaning that you had no other than collision or comprehensive or collision on the vehicle prior, you're going to be automatically covered, and you will have to notify the insurance company within 4 days. The coverage would be a $500 standard deductible for the new vehicle. The reason for the 4 days is because we used to have to do this face-to-face, and that meant that if you went on the Friday of a Memorial Day weekend, like a holiday weekend, you wouldn't be able to see your insurer face-to-face until the 4th day, and that's why they made it 4 days. Part A, coverage under personal auto policy, is going to be for liability coverage. Remember, liability coverage always is going to protect the first party, and it's going to pay out to the third party for any bodily injury or property damage from the operation of a motor vehicle that is covered. You will have the insured as the insured or any family member for the ownership, maintenance, and use of that auto or trailer. Any person that is using the covered auto with the permission of a non-excluded driver, right? So a spouse can't be excluded, and an excluded driver may not give permission. An insured's covered auto for any person or organization due to legal responsibility. So if you were driving the car for your employer or as a charitable organization, that's going to be covered as well. Supplementary payments. So personal auto policy will pay for your lawsuit defense, right? So your attorney fees, appraisers, and all that stuff, up to $200 a day if you have to appear in court because of the lawsuit for your lost income. Things that won't be covered by the personal auto policy. So any intentional damage or injury. So road rage will not be covered in any way by a personal auto policy if they can prove it. Any damage to property owned or transported by the insured. So if you were potentially taking a flat screen TV somewhere, your flat screen TV is not going to be covered if it gets damaged in the accident. Public or livery conveyance, this would be things like Uber, Lyft, operating as a taxi, or doing any of the other types of things where you're getting paid to drive the vehicle. And use of auto without the permission, this would not exclude a stolen vehicle, but if somebody that was not authorized to use the vehicle had taken the vehicle and used it, then the insurance will not pay for that. Personal auto policies cannot cover vehicles with less than 4 wheels. There's different policies that you can get, like motorcycle policies for those 3-wheeled vehicles. Off-road vehicles are not able to be covered under a personal auto policy, neither are racing vehicles. Now, there are different limits of liability types that you can use on a personal auto policy. The first one's going to be called a split limit, and the second one's going to be called a combined single limit. The split limit is going to have the first number in thousands of dollars, and it's going to be the per person bodily injury limit, meaning that no single person can be paid more than that amount on a single accident event. Then the second number is going to be the aggregate bodily injury coverage amount, and all people can be paid on the individual amounts until the aggregate has been exhausted. Typically, the aggregate is going to be double the per person bodily injury amount. And then the third number is going to be in thousands. Again, this is going to be the aggregate property damage that will be covered per accident on the plan. Combined single limit, the way that this works is this one's going to be actually like a checkbook. So it doesn't matter whether it's coming from bodily injury or property damage. There's no sublimits like there are in the split limits. And so therefore, whatever the combined single limit is everything that's available for all payments under a single claim. Now, in both of these personal auto policy limits of liability, these will reset after the accident has occurred. So once you've gone through one event, they will reset, and then you will have the limits there for the second or any subsequent accidents during the coverage period. So to go over some examples with this, question 7 in your book says Ed has an auto policy with liability coverage and is liable for the following damages in a 2-car accident. Where there is $15,000 for the injured driver of the other car, $35,000 for the injured passenger of the other car, and $35,000 for the damage to the other vehicle. How much will Ed's policy pay if he has split limits of $30,000, $60,000, and $25,000? So the way we apply this is that the driver has less than $30,000 of injuries, and so the driver can be paid out in full at $15,000. The passenger, however, has more than $30,000 in injuries, and no insurance policy will pay over the limit. So the limit in this case is going to be the per person bodily injury limit, sublimit in the plan, which is $30,000. So that's the maximum that the insurance will pay in this instance. And then the maximum that the insurance will pay for the property damage is $25,000, even though there's $35,000 of damage. So when you add all that up, the insurance is only going to pay Ed to the third party that he damaged here. They will pay in total $70,000 instead of the $85,000 of actual occurrences. Now, that does mean that Ed would be responsible for the remaining $15,000 because the insurance didn't pay for it. He's still responsible for it. So Ed would still have to pay that. Combined single limit, however, works a little bit differently. If we apply Ed's situation to a combined single limit where he had $85,000 of coverage, the driver would be able to be paid out the $15,000, so there would be $70,000 left in the virtual checkbook, if you will. The passenger would then be able to be paid the $35,000, which means there's $35,000 left in the virtual checkbook, and then that $35,000 can be paid out with a zero out balance for that event for a total of $85,000 paid out in the event of a combined single limit. Now, combined single limit is sometimes looked at differently by different insurance companies. It usually is a little bit more expensive to get a combined single limit policy than it is to get a split limit, and there are certain companies that frown upon agents writing combined single limits. But that being what it is, that they just work a little bit differently. Okay. So question 9 in the book is going to say Mr. Jones purchased an auto policy with split limits of liability in the amounts of bodily injury $30,000 per person, $60,000 per occurrence, and property damage $25,000. His wife was driving him to work when she caused an accident with Mr. Smith. Mr. Smith sued and was awarded damages for his injuries in the amount of $32,000 from Mrs. Jones and $4,000 from Mr. Jones. Mr. and Mrs. Jones' insurer spent $5,000 in defending and settling the claim. How much did the Joneses policy pay for all costs? In this case, what we've got to do, anytime you've got a narrative question like this, where they're trying to give you a whole bunch of set of facts or explaining what we call a case, what you've got to do is you got to figure out how many different people were injured and how many different properties were damaged in this case. So in this case, what we find is that there is only one party that was damaged, or that was actually, I'm sorry, one party that was injured. Right. So there was only bodily injury in this case. There was no property damage that was listed in this case. And the Mr. Smith was the party that actually was injured. So Mr. Smith was awarded a total of $36,000 of injuries from the court. Now, again, this policy is a $30,000 per person bodily injury limit, so the policy can only pay out $30,000 to Mr. Smith. That does mean that the Joneses would still have to pay the $6,000 separate than the insurance plan to Mr. Smith. The question, however, was looking at how much was the total amount that the Joneses policy paid for all costs. Now, the Joneses policy has to pay for that duty to defend the insured from the third party. And in this case, those costs were $5,000. So you would take the $30,000 that they'll pay for the bodily injury per person limit and the $5,000 that the insurer will pay for settling and defending the claim. And that would be D, $35,000. All right. So if you happen to have your coverage in a different state than where you actually reside, if you're traveling elsewhere, like say you travel to a state like California, California has higher state minimum insurance limits than the state of Texas. So when you travel to California, what ends up happening is your insurance automatically goes up to their state minimum level for the duration of time that you're in California. And then when you come back to Texas, it's going to go back down to your normal levels of insurance if those are wherever they were originally at. Okay. As we previously discussed on other insurance, the other insurance clause on personal auto policy is going to be considered primary and excess. So in personal auto insurance, what happens is if there are different policies that cover the driver and the car insurance, the insurance on the vehicle is going to be primary. And then the driver insurance is going to be excess, meaning that if the limits of the primary policy have been exhausted, then the second policy to come in and pay in that case would be the excess policy of the driver. Now we get to the first party payout coverages under a personal auto policy. Part B1 is going to be for medical payments. One unique thing that is a little bit different about Part B1 here is that this will pay for all necessary medical and up to funeral expenses, if necessary, caused by an accident sustained by an insured, regardless of fault. So this will pay out to the first party for up to 3 years after the accident. This payment can only be made to insureds, not to third parties. One interesting thing about this is that the insured or anybody that's a family member, which would be classified as an insured, if they are struck as a pedestrian by a motor vehicle that is used designed for public road use or any trailer, they will have coverage under this part, regardless of whether they were, if they were just walking and then were hit by a car. So you could have parked your car and then gone to the Mavericks game downtown Dallas. Somebody clips you with a trailer as you're trying to cross the street, injures you. You can make a claim under your auto insurance under Part B1, even though you were not in a vehicle or near a vehicle at the time, but you just got struck by a vehicle as a pedestrian. Minimum insurance on this Part B1 is going to be $500 per person, but you can definitely increase the amounts on that. Part B1 or Part B2 is similar to Part B1, but it has additional protections. This is called personal injury protection, or PIP. It is required by the state that the insurance company must offer $2,500 minimum for this insurance. It is optional for the insured to take it, but because it is required for it to be offered, it requires a written declination by the insured if they're not going to take the insurance. So what you additionally get here over the medical payments that would be $2,500 per person, but can go higher, would be in addition to those medical or funeral costs, you're going to increase, or you're going to add on the loss of income and any rehabilitation services that are going to be needed onto the PIP coverages over the medical payments B1. Part C, this is going to cover your uninsured or underinsured motorists, right? So there are definitely going to be some instances in which the other party that you're involved with may be still responsible for it, but they don't have enough insurance to cover it on their own. And they may not have any other assets to be able to make up for that on their own as well. And so therefore, uninsured and underinsured motorists as on a personal auto policy will cover to make up for their lack of having the proper amount of insurance. Now, what you will see is that this is required to be offered by the state, by the insurance company, but it is optional again for the insured to take it. It will require, again, a written declination. Typically with these written declinations, it can just be an initial onto the application form. Now, the coverage will mirror the coverage type as whatever was on coverage A. So you're generally going to have the limits of liability going to be similar to, but you can go up to the amount that you have on coverage A, or anything less than that on a split limit. Same on a combined single limit. So you will have that available if you have the coverage A as a combined single limit. Now, the deductible on Part C is just going to be $250. Definition of an uninsured motorist in this part is going to be one that has a third party that has no liability or bond insurance, one that has less than the state required minimum. If the accident was a hit and run, meaning that no driver can be identified, or if the insurer or surety bond company denies the coverage or has become insolvent. In those cases, those would all be uninsured motorists. The definition of an underinsured motorist is one that has coverages but is insufficient limits for the third party to cover the loss. Part D, this is going to be coverage for damage to your automobile. This is, again, a first-party coverage. Other than collision, commonly known as comprehensive, is an open perils coverage, meaning that things like flood, glass, breakage, animal collisions, all those types of things will be covered under an OTC or other than collision comprehensive plan. You also have another single peril of collision. This is the upside or impact of an automobile with a vehicle or object, and this will cover all of those situations regardless of what your vehicle collides with. It could even be the pavement. There's a guy down in south central Texas that failed to get his vehicle off the roadway, and a tornado came through, upended his car, and landed down on the pavement. And that was a collision with the pavement that caused damage to his vehicle. So that was kind of a unique situation, but still a collision claim. You will get under Part D automatically with no additional premiums to the Part D. You will get alternate transportation expenses paid for by the policy for up to $20 a day, up to $600 for total. There will be a 24-hour wait for all reasons except for theft, in which there will be a 48-hour period for waiting on this. And this is for all types of alternate transportation. You can do buses, trains, taxis, Ubers, whatever is required. You just have to submit it for reimbursement from the insurance company. If you choose to, for additional money, meaning an endorsement, you'll pay extra money for this. If you have the comprehensive coverage, you can get rental reimbursement, so that you don't have to deal with these more public types of transportation options. And those, again, will be up to whatever limits are on that reimbursement endorsement. What's excluded under your personal auto policy? They're not going to pay for things like wear and tear. Most importantly, freezing is something that is not a peril that is covered under personal auto. Any mechanical or electrical failures or any damage to your tires, those will not be covered. Limited amounts of customizations or electronics will be able to be covered under the policy. And never any racing exposures will be able to be covered under a personal auto policy. The limit of liability under your personal auto policy is going to be the lesser of the actual cash value or the amount to repair or replace the vehicle. Under Part E, there are some duties that you have after an accident or a loss. First thing is going to be a prompt notification of loss. The next one is going to be cooperating with the insurance company. You have to submit a proof of loss. This one's going to be within 91 days in the state of Texas. If the vehicle was stolen or you have a hit and run, there has to be a police report as part of that submission for the proof of loss. And if the vehicle is damaged and you can protect it from further loss, they expect you to go ahead and do that. And then, of course, the insurer is never going to be able to pay you out unless they have the ability to inspect and appraise that damaged property. The general provisions under Part F are going to define the period and territory in which the coverage is going to be in effect. Personal auto policies in the state of Texas are going to be effective from 12:01 a.m. on the effective date through 12:01 a.m. on the expiration date. There's going to be coverage in all of North America, including Canada, U.S., its possessions, and territories, even those that are not in North America. So you'll have coverage in Guam, U.S. Virgin Islands, Puerto Rico. But this will not have coverage in Mexico. So you would have to get separate specialty coverage to cover you for a personal auto policy in Mexico. Termination of a personal auto policy. The insured can cancel the policy at any time for any reason. Sometimes they can require this to be in writing, but it's not required to be in writing. It's just something that the insured may make as a rule on here because they have to have a formal declaration of the cancellation. The insurance company, the insurer, can cancel the policy after a 10-day written notice to the insured. If it's during the first 60 days underwriting period, that can be with no other reason, or if it was due to a non-payment of the premium. So if you stop paying your payments, if you have your driver's license suspended or revoked as an insured, you will potentially lose your personal auto policy. The policy, if it was obtained through material misrepresentation or you submit a fraudulent claim, those are reasons why the insurance company would possibly cancel out the policy. And then also the financial insolvency of the insurer, or if that insurer has lost its reinsurance, the TDI is going to require it in those cases, and therefore they will have to cancel out your policy at that point. If you are going to be non-renewed on a personal auto policy, it does require a written notice of 30 days minimum on an annual period. The insurer, most importantly on these personal auto policies, may not cancel a policy solely based on an insured's age. Now, they can definitely increase the rates. And one thing that I will note is that if they're, a perfect driver, nothing can happen there. But if they ran over 3 mailboxes in the last week, that might be a reason for them to go ahead and revoke the policy or cancel it out. All right, so now let's go over some questions under the personal auto policy. So the first one we're going to do is number one, a policyholder would expect to find which of the following information in the insuring agreement of an auto policy. Would it be A, the bodily injury limits of liability, B, the insurance company's promise to pay on the behalf of the insured, C, the exclusions regarding certain uses of the auto, and D, the obligations of the insured in the event of a loss? So this one's going to be B, the insurance company's promise to pay on the behalf of the insured. Number two, auto limits of 50/100/50. What does that mean? Is it A, $50,000 bodily injury per person for each person, $100,000 bodily injury for each occurrence, and $50,000 property damage for each accident? B, $50,000 bodily injury for each person, $100,000 bodily injury for each occurrence, $50,000 medical payments for each occurrence. C, $50,000 bodily injury total for all passengers, $100,000 property damage for each occurrence, and $50,000 total medical payments for each occurrence. Or D, a total of $150,000 is the maximum amount that will be paid out to a claimant. The most correct answer here is A, $50,000 bodily injury per person, $100,000 bodily injury each occurrence, and $50,000 property damage each accident. Number 3, Mary has a personal auto policy with a combined single limit of $300,000 for bodily injury and property damage. After causing an accident with 2 other automobiles, the court awards $200,000 bodily injury and $25,000 property damage to Mr. Jones and $100,000 bodily injury and $15,000 property damage to Mrs. Smith. How much will the insurance company pay in total on behalf of Mary to the 2 parties? The options are going to be A, 300,000, B, 325,000, C, 315,000, or D, 340,000. So again, the checkbook's only got $300,000 in there, so A, $300,000 is going to be the limit and how much will be paid out on Mary and on behalf of Mary to the 2 parties for this situation. Number 4, Mr. Jones has a personal auto policy with bodily injury limits of $50,000 and $100,000. His wife is driving his insured vehicle when she has an at-fault accident and injures Mr. Brown. Mr. Brown is awarded $47,000 for Mrs. Jones as the driver and $6,000 for Mr. Jones as the vehicle owner. The company incurred $8,000 in expenses handling the case for the insured. What does the Joneses policy pay out for this accident? A, $53,000, B, $61,000, C, $50,000, or D, $58,000. So even though the amount of actual bodily injury that was awarded to Mr. Brown in this case was $53,000, it will be limited by the per person event limit of $50,000. And then they paid $8,000 out in the settling and defense of the Joneses in this case. So D, $58,000 is the correct answer. Number 5, how much will a personal auto policy pay for the insured's taxi expenses if the insured's vehicle is stolen? A, $20 per day up to $600. B, $25 per day up to $650. C, $15 per day up to $450. Or D, nothing. The answer here is going to be A, $20 per day up to a maximum of $600. Number 6, medical payments coverage provides protection for all the following things except A, the insured, B, the passengers in the insured's vehicle, C, the insured's family members, or D, the occupants of a vehicle that is struck by the insured's vehicle. Understand medical payments under B1 is going to only be covering first party. So D represents third party people, occupants of a vehicle that is struck by the insured's vehicle, and that is the one that won't be covered by medical payments. Number 7, all the following are true regarding physical damage coverage except. So what is not covered by physical damage coverage, or what is not true about physical damage coverage? A, losses to newly acquired autos will be the same as the broadest coverage available for any other covered auto. B, the policy will pay $20 per day up to a maximum of $600 for substitute transportation. C, the insurer will pay for direct and accidental loss to a covered auto minus any applicable deductible. Or D, the limit of liability is the greater of the actual cash value of the vehicle at the time of the loss or the amount necessary to repair or replace the vehicle. So the false statement here is going to be D, the limit of liability is the greater of the actual cash value of the vehicle at the time of the loss or the amount necessary to repair or replace the vehicle. To make this true, the statement would have to say the lesser of, right? Now, number 8, while personal injury protection PIP benefits under an auto policy are paid without regard to fault, an insurer may not pay benefits for any injury A, intentionally caused to an insured by an insured, B, injuries that are under $500, C, those caused by an underinsured driver, or D, those caused by a public agency vehicle. In this case, A, an intentional caused injury would always be excluded under all personal auto policy claims. So regardless of whether this was under PIP or not, it would not be able to be paid out. None of the other reasons would be a reason to deny coverage under a PIP. Number 9, auto combined single limits of liability of $85,000 means what? A, $65,000 bodily injury each occurrence, $25,000 property damage each occurrence. B, $85,000 bodily injury each occurrence. C, $85,000 property damage each occurrence, or D, $85,000 bodily injury and property damage each occurrence. In this case, combined single limit of 85 means $85,000 bodily injury and property damage each occurrence, option D. Number 10, which of the following statements about canceling a personal auto policy is correct? That implies that 3 of these are going to be incorrect and 1's going to be correct. The first answer is A, the insurer must give the insured a 90-day notice in order to find new insurance. B, the insurer must inform the fair plan that it is canceling a policy. C, the insurer may cancel a policy at any time with a 10-day written notice if the insured fails to pay their premiums when due. Or D, the insurer must inform the agent that his commission must be returned. The only true statement here is going to be C. The insurer may cancel a policy at any time with a 10-day written notice if the insured fails to pay the premiums when due. All right, that ends Chapter 8. And now we're going to be moving on to Chapter 9, Umbrella and Excess Liability and the Residual Markets. So umbrella and excess liability policy, the whole reason that we're talking about these is because these will extend liability coverages over what you originally have under your base insurance policies. So in both cases, you have to have an underlying policy to make these work, and you can write these for either individual needs under personal lines or for business needs under commercial lines. The umbrellas are designed to work over multiple policies, and the excess liability is going to be mirrored coverage, so it can only work with a single policy. Now, these will extend out all the supplementary payments, so costs for the lawyers and any of those payments for duty to defend will be extended beyond the original policies under either an umbrella or an excess liability policy. And there is a concept of a situation in which an umbrella does cover a condition for liability that is not covered under an underlying policy. This is not a violation of the umbrella, meaning that the policies did have an underlying policy situation that would cover in those situations, but there are sometimes some things that would fall under the coverage of the umbrella but just do not fall into one of the underlying policies. In this case, what would happen is that there would be a special retention called a self-insured retention, which is like a deductible, which is normally not applied under a liability policy, but in this case would have to be, because otherwise there would be no barrier to making a claim. So in these cases, you would have to have a self-insured retention or a SIR. Now, one other thing to note about this is if the underlying policy's limits are not adequate for the umbrella or for the excess policy, it is the responsibility of the insured to make up the difference of what they should have had under the underlying policy. So if for some reason, say you were supposed to have $500,000 of liability on the policy for the underlying policy and you only had $300,000 on that, you would have to pay the $200,000 before any payments from the umbrella could continue. And that is all that we have to talk about specifically about umbrellas and excess liability. Now we get to talk about residual markets, which are those markets that assume risks that are unacceptable to the general market. Most of these you can't sell, but you may have to have some association with them, and that's why we will be tested on this in the initial licensing. So the first one we're going to talk about is the Texas Fair Plan Association. FAIR is an acronym that stands for Fair Access to Insurance Requirements. The TDI is going to look at underserved areas and assign these underserved areas designated by zip code the special protections for the Fair Plan options. Typically, these are going to be blighted or areas in decline. And to qualify for the Fair Plan, you have to have been declined by carriers at least twice, or there has to be no insurance on the property within the last 6 months. If you're accepted onto the Fair program, there's $1 million in dwelling coverage and $500,000 for personal property coverage. The TWIA program would not be eligible under the Fair Plan, but the Texas Department of Insurance already knows that, so they would not assign any of the zip codes in the TWIA area to these Fair Plan zip code designations. Speaking of Texas Windstorm Insurance Association, TWIA, these are all going to be for coverage for people that can't find private coverages in the first tier counties. This would be all those that are along the Gulf Coast of the Gulf of Mexico, all the way from Matamoros to the Louisiana border. So the association for these is made up of all the property insurers that are authorized to transact property insurance within the state, and therefore they all have to participate. So one thing to note about a TWIA plan, this is what we consider to be a contents, not personal property policy, meaning that it has to be physically inside of the domicile in order to be covered. So normally under personal property coverages like dwelling and homeowners, you can have things in the near vicinity covered. But in this case, they actually have to be physically inside of the residence or domicile or premise. One other note here is that in order to qualify for the TWIA insurance, you have to be in compliance with the applicable building code, and most all of those building codes now are requiring construction standards to Category 5 hurricane standards in those first-tier counties. The next one that we're going to talk about is the Texas Motor Vehicle Safety Responsibility Act. We've kind of talked about this a little bit with the personal auto policies, but the insured is responsible for providing bodily injury and property damage liability coverage, but they are not required to have under or uninsured motorist or PIP, personal injury protection coverage. Those may be rejected, but those must be offered by this law to from the insurance company to the insured. So they have to be rejected in writing. Now, the minimum requirements for the state of Texas are going to be split limits of 30,000 bodily injury per person, 60,000 bodily injury aggregate, and 25,000 property damage aggregate, or a combined single limit of 85,000. Now, you don't have to have insurance in the state of Texas. There are alternate ways to comply. You can have registered 25 or more vehicles. In that case, you don't have to prove that is your proof of responsibility to the Department of Transportation. You can take out a $55,000 surety bond with this Department of Transportation to be held in case something does happen. They will go through suretyship on that bond, and we'll talk more specifically about surety bonds later in Chapter 15. You can also put down a $55,000 cashier's check or cash deposit with either the state comptroller or the local county judge. When you do that, you definitely want to make sure you have the proof of this alternate compliance in the vehicle with you at all times, because it is required for the copy of the policy, a binder or proof of insurance, or the alternate compliance is going to be required when you're operating a motor vehicle to display for the review of any law officer that pulls you over while operating the motor vehicle. Speaking of getting in trouble with insurance or in trouble with driving an automobile, if you happen to be somebody that has a hard time keeping insurance and you get dropped and you're having a hard time finding a new carrier, what ends up happening is you may get referred over to what we call the Texas Automobile Insurance Plan Association, TAIPA. This is made up of 15 committee members of all the admitted insurers that sell automobile insurance within the state. Basically, the association is going to assign every member in there on an assigned risk pool basis and a pro rata share to equal to the business that they already have in the state. So say, for example, company Y has a 22% market share. They're going to take 22% of the TAIPA drivers in the state as well. Now, one thing to note here is that you have to be rejected at least twice to qualify for the plan, and the insured is not probably going to like the rates, but this will allow them to stay legal and continue to have insurance while operating the motor vehicle in the state. The next one we're going to talk about here is the Property and Casualty Insurance Guarantee Association. The important thing to note here is this protects Texas claimants and policyholders from the insurance company's insolvency, right? So if these insurance companies somehow go out of business, this allows for a mechanism for all the rest of the insurance companies, which are going to be all the admitted carriers within the state, to make up for the losses that would occur from those insurance companies going out of business. Now, one important thing to note here is that you have to be a Texas resident to be able to claim under the Guarantee Association. If you're a Louisiana resident that happens to have Texas property, you just cannot, unfortunately, make a claim in this program. This is made up of a 9-member board that is appointed by the governor for a 6-year term. 5 come from the insurance industry and 4 come from the general public. They set up 3 separate accounts to pay out the claims for these situations. So the full amount will be paid in the case of any workers' compensation claims, up to $25,000 for any unearned premiums in those cases where the insurer goes out of business, and up to $300,000 for all other claims from a single occurrence will be able to be paid out of these separate accounts. Texas Mutual Insurance Company is the next one we're going to talk about. Texas Mutual Insurance Company is dealing with workers' compensation, and it generally is considered to be the insurer of last resort for employers that are unable to get workers' compensation through the private market. Similar to the structure of the Property and Casualty Guarantee Association, there are 9 directors under the Texas Mutual Insurance Company. 5 are appointed by the governor of those 9 directors, and 4 are elected by policy holders. And this is made up of all the insurance companies that sell the workers' compensation within the state. The next one we're going to talk about here is Texas Medical Liability Insurance. This is a joint underwriting association, JUA, for medical professional liability for those that cannot find private professional liability for medical purposes in the state. This policy, when accepted onto it, will give you $1 million maximum per occurrence, a $3 million maximum aggregate. This can include premise and operations liability exposure from a doctor's office. And then the one that seems to be tested the most by the state of Texas is the National Flood Insurance Program in this section. Couple things to note about the NFIP, National Flood Insurance Program. There are 3 flood zones designated by the Army Corps of Engineers on a map that is updated periodically. There's the 100-year floodplain, the 500-year floodplain, and outside of the floodplain. In order to qualify for NFIP coverage, you must meet the community guidelines, which means that you have to have at least 2 solid walls, a roof, and be on a permanent foundation, not entirely over water, and whatever other guidelines the NFIP is putting out there. Now, understand, similar to TWIA, this is the flood program insurance is going to be contents and not personal property as far as what is going to be covered under the policy. These policies also are required to have a 30-day waiting period for a new policy and 5 days for any formal changes to the policy or endorsements, unless this is a big caveat, unless it was purchased with a new or revised loan, in which case it would be effective immediately upon closing. So even if the people that previously had the home to you didn't have flood insurance, you can buy it at the time of the purchase of the property, and then you can have that policy go into effect immediately when you take ownership of that property. Flood is defined by the NFIP as a general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or of 2 or more properties, one of which being the insured's property. Now, some causes of floods that you'll find out there: you can have overflow of inland and tidal waters, you can have flash flooding, you can have mud flow, or you can have this unusual one called collapse or erosion of land along the shore exceeding anticipated cyclical levels. The key on the test on this would be exceeding anticipated cyclical levels. An example of this would be you built a house on the shoreline of a lake, and the engineers said that based on the erosion patterns that you wouldn't have any problems with your foundation for 50 years. 5 years in, crazy things happen outside of the normal expectation, and the house foundation collapses in just 5 years. So that would be outside of what the engineers expected, so outside of the anticipated cyclical levels, and therefore could qualify for flood coverage. Understand, as a personal coverage under flood insurance, you're only going to get $250,000 coverage for the building and $100,000 coverage for the contents. As a business, you'll get $500,000 both on the building and on the contents. There is a deductible separate each of $1,000 on the building and the contents. And one good thing that you do get with NFIP coverage is flood insurance will cover property removed for up to 45 days. Under typical homeowner or other types of property policies, you're only going to get this for 30 days. but under flood insurance, you get it for $45. Now, understand that this insurance is privately written on a write-your-own basis, WIO basis, and agents have no binding authority, which makes sense because there is a waiting period on these policies, but no binding authority by agents in this case. All right, so time to review Chapter 9, Umbrella and Excess Liability Policies in Residual Markets. Number 1, individuals who need more liability coverage than provided by their auto, homeowners, and RV or watercraft liability policies should purchase what? A, an excess liability policy to cover their auto policy. B, a personal umbrella policy to cover all their liability policies. C, a surety bond, or D, a commercial umbrella policy. Well, since this is a individual, they would be looking at a personal umbrella B for all their liability policies. Number 2, what is a self-insured retention or a SIR? Is it A, the amount that required as the underlying policy limit, B, the amount the insured agrees to pay for a loss covered by the excess policy but not covered by the underlying policy, C, the amount the insured agrees to pay if the underlying policy does not pay but which is covered by the umbrella policy, or D, it is the deductible on an excess liability policy. So there is never a SIR involved with an excess liability, so that'll eliminate both answers B and D. So C is the correct answer here, the amount the insured agrees to pay if the underlying policy does not pay, but which is covered by the umbrella policy. Number 3, Dan wants more liability protection than his auto, boat, and homeowners policies provide. He purchases a personal umbrella policy with a SIR of $1,000, which requires underlying policies have minimum limits of $500,000 combined single limit. He increases his limits to the required amount on his homeowners and auto policies, but he carries only $300,000 liability limits on his boat policy. What is Dan's retention in the event of a claim? A, $0, B, $1,000, C, $200,000, or D, $500,000. So he didn't keep the adequate amount there, so he was responsible for making up the difference between the $300,000 and the $500,000 that was required there. So his retention in the event of a claim is going to be $200,000 C. Number 4, under the National Flood Insurance Program, NFIP, which of the following would be a covered loss? Would it be A, water damage from a broken water line that flooded a home on 1 acre, B, water damage from 2 homes, from the runoff after a heavy rain, C, water damage from the overflow from a bathtub, or D, water damage from a leaking washing machine? In this case, it's going to be B, assuming that one of the 2 homes is not your property. This would qualify as a flood under NFIP. The other 3 would not qualify in any case. Number 5, to obtain insurance through the Texas Automobile Insurance Plan Association, TAIPA, an applicant and his agent must certify that the applicant A has been rejected for insurance by at least 2 licensed insurers actually writing auto insurance, B has not been involved in an at-fault accident in the last 12 months, C has lived in the state for less than 3 months, or D is of good character and sound financial condition. The only requirement here for TAIPA is that you are A, have been rejected for insurance by at least 2 licensed insurers that were actually writing auto insurance within the state. Number 6, which of the following statements concerning the Texas Property and Casualty Insurance Guaranty Association is not correct? A, any claim that would not be covered by the insurer is not covered by the association. B, the association is divided in 5 separate accounts. C, the failure to pay an assessment when due may cost the insurer revocation of its COA, Certificate of Authority. Or D, the only Texas residents with policies covering Texas risks are covered. So A, C, and D are all true statements. The one that is not correct is B, the association is divided into 5 separate accounts. That's incorrect because it's only 3 separate accounts. Number 7, which organization is considered to be the insurer of last resort for workers' compensation in the state of Texas? Is it A, the Texas Property and Casualty Pool, B, the Texas Mutual Insurance Company, C, the Texas Property and Casualty Insurance Guarantee Association, or D, the Texas Insurers Federation? This is going to be B, Texas Mutual Insurance Company. Number 8, which is not true about the Texas Medical Liability Insurance Underwriting Association, JUA? A, it is a non-admitted insurer. B, it has a certificate of authority. C, it writes medical malpractice insurance. Or D, it writes premise liability for a doctor's office. So A and B are opposite of one another, and this does have a certificate of authority under JUA. So the one that is not true is A, it is a non-admitted insurer. Number 9, which of the following is not a flood? 3 of these will be a flood and 1 will not. A mudslide over 2 acres. B, rain runoff covering over 3 acres. C, erosion along a lakeshore. Or D, broken water main overflowing covering 2 city blocks. So the only one that is not a flood is going to be C, erosion along a lakeshore, because it lacks the keywords of exceeding anticipated cyclical levels. Number 10, the following property is not covered under a Texas Windstorm Association policy except. So I know this is kind of weird because there's a not except. What this is actually asking is what is covered under a Texas Windstorm Association policy. Is it A, the patio furniture, B, appliances inside the house, C, outside storage boxes, or D, boats on shore? In this case, the correct answer is going to be B, appliances inside the house. That concludes Chapter 9, Umbrella and Excess and Liability and Residual Markets.